You open your banking app, and before you even finish scrolling, you already feel it. Your money doesn't stretch the way it used to, even though your routine hasn't really changed at all. Your rent is higher than last year, your groceries cost more, and even small things like coffee or transport seem to quietly add up faster than before, which makes your monthly budget feel tighter. And the frustrating part is, it doesn't feel like a sudden shock. It feels like a slow squeeze, like something is gradually tightening around your finances without you fully noticing it happening. You might even ask yourself if you're spending more than before, but when you look closely, your habits are almost the same, and yet somehow, your expenses keep climbing anyway. Rent is usually the biggest one. It takes the largest portion of your income, and when that number increases, everything else starts to feel harder to manage. You might try to cut back in other areas, skip meals out, delay purchases, or reduce entertainment. But none of that really offsets the steady rise in housing costs. So the question becomes unavoidable. Why does rent keep going up, even when wages don't rise at the same pace? And why does it feel like it never stops? To understand this, you have to step back and look at how housing actually works. Because rent is not just about your landlord, it's connected to a much bigger system. Housing is not just a place to live. It's also treated as an investment, and that changes how prices behave in ways that don't always feel fair to the people living there. When more people want to live in a certain area, demand increases, and when demand rises faster than supply, prices naturally move upward, including rent. Think about cities where jobs are growing, more people move in, looking for better opportunities, and suddenly, more people are competing for the same number of homes. If there are not enough new homes being built to match that demand, landlords have more power to raise prices, because someone else is always willing to pay. This is why popular cities often see the fastest rent increases, because the number of people arriving grows faster than the number of homes available. At the same time, building new housing is not as simple as it sounds, because there are regulations, land costs, construction delays, and approval processes. Developers can't just build overnight, and even when they do, they often focus on higher-end properties because those bring better returns on investment. This means many new buildings are not designed for average renters. They are designed for higher-income tenants, which doesn't solve the affordability problem. So even though you might see new apartments going up, they don't necessarily bring relief to your rent, because they are priced above what most people can afford. Another layer comes from interest rates, which affect how expensive it is to borrow money, and that impacts both buyers and landlords in different ways. When interest rates rise, mortgages become more expensive, and landlords who have loans may increase rent to cover their higher monthly payments. At the same time, higher interest rates make it harder for people to buy homes, which means more people stay in the rental market longer. This increases demand for rentals even further, which again pushes prices upward, creating a cycle that feels difficult to escape. Now imagine this happening across an entire city, where thousands of people are competing for limited rental units and landlords adjust prices accordingly. But there's also another factor that often gets overlooked, and that is the role of large investors entering the housing market. In recent years, big companies and investment funds have started buying residential properties at scale, treating housing as a financial asset. When this happens, homes are no longer just places for families. They become part of portfolios, and the goal shifts toward maximizing returns. This can lead to more aggressive rent increases, because these companies operate based on profit targets rather than individual tenant relationships. And because they own large numbers of units, their pricing strategies can influence entire neighborhoods, not just single buildings. Technology also plays a role, as some landlords use data-driven pricing tools that analyze market trends and recommend optimal rent levels. These systems can adjust prices based on demand patterns, similar to how airlines price tickets, which means rent can increase more efficiently and frequently. From a business perspective, this makes sense, but from a renter's perspective, it feels like there's no room to negotiate or push back. At the same time, wages are not keeping up at the same rate, which creates a growing gap between income and housing costs. You might get a small raise each year, but if your rent increases faster than your salary, your real financial situation actually worsens. This is why even people with stable jobs often feel like they're falling behind, because their biggest expense keeps rising. And it doesn't stop there, because rising rent also affects other parts of your life in ways that are easy to overlook. You may delay moving out, stay with roommates longer, or move further away from work just to find something more affordable. Longer commutes mean more time spent traveling, higher transport costs, and less time for yourself or your family. It also affects major life decisions, like when to get married, have children, or even whether to change jobs. For some people, It means constantly moving, chasing slightly lower rent in different areas, which creates instability in daily life. And for others, it means sacrificing savings, because a larger portion of income goes toward keeping a roof over their head. Over time, this reduces your ability to build wealth, invest, or prepare for emergencies, which increases financial stress. You may feel like you're working hard, doing everything right, but still not making progress, because your expenses keep catching up. This is why rising rent doesn't just feel like a financial issue, it feels like a life issue, affecting your choices and your sense of security. Even small rent increases can have a big impact, because they are recurring. They don't happen once, they happen every single month. And once your rent goes up, it rarely comes down, which means each increase becomes part of your new baseline. This creates a situation where every year starts slightly harder than the previous one, even if nothing else changes. At a larger level, governments try to address this through policies, but solutions are often slow and complex to implement. Some cities introduce rent control, limiting how much landlords can increase rent each year, but this can also reduce incentives to build new housing. Other approaches focus on increasing supply, encouraging developers to build more homes, but that takes time and investment. There are also efforts to create affordable housing programs, but demand often exceeds what these programs can provide. So while solutions exist, they rarely deliver immediate relief, which means renters continue to feel the pressure in the short term. And because housing is such a basic need, people are forced to adjust, even when the system feels unfair. You may find yourself budgeting more carefully, cutting back on other expenses, or looking for side income just to keep up. You might even accept a smaller space, fewer amenities, or less convenient location, simply because it fits your budget. All of these adjustments are personal responses to a system that operates on broader economic forces. And the truth is, rent doesn't go up because of one single reason. It's the result of multiple factors working together at the same time. Demand, supply, interest rates, investment behavior, and wage growth all interact, creating a complex system that shapes what you pay. From your perspective, it feels simple. Rent went up again, but behind that number is an entire network of decisions and pressures. Understanding this doesn't immediately lower your rent, but it helps explain why the trend feels so persistent. It also explains why short-term solutions rarely work, because the problem is deeply rooted in how housing markets function. The more people move into cities, the more pressure builds, and unless supply keeps up, prices will continue to rise. And unless incomes grow at a similar pace, the gap between what people earn and what they pay will keep widening. That's why rent increases feel endless, because the forces behind them are ongoing, not temporary. So when you look at your rent next month, and it feels higher than it should be, you're not imagining it. You're experiencing the outcome of a system where housing is both a necessity and a business, and those two roles don't always align. And until that balance changes, the pressure on renters is likely to remain a constant part of modern life. But there's one more layer to this that makes the situation even harder, and that is how expectations about housing have changed over time. In the past, owning a home was seen as the natural next step, but today, many people are staying in the rental market for much longer. This means the rental pool keeps growing, because fewer people are exiting into home ownership, which keeps demand elevated year after year. At the same time, population growth continues, new households are formed, and all of them need a place to live, which adds constant pressure. And when supply struggles to keep up with this steady increase in demand, prices respond accordingly, pushing rent higher. There's also the issue of location, because not all housing is equal, and areas close to jobs, transport, and amenities are always more in demand. So even if new housing is built far away, it doesn't fully solve the problem for people who need to live near economic activity. This creates pockets of extreme demand, where rents rise faster than average, especially in city centers and high-growth areas. You might notice this yourself, where moving just a short distance can significantly change your rent, even within the same city. That difference reflects how demand concentrates around opportunity, and how people are willing to pay more to reduce travel time. Over time, this reshapes entire cities, pushing lower-income renters further out while central areas become more expensive. And that shift changes communities, daily routines, and even the social fabric of neighborhoods. So rising rent is not just about numbers, it's about how cities evolve and who gets to live where within them. If you want to understand more about how money, markets, and everyday life are connected, subscribe to the channel, because we break it down in a way that actually makes sense.